The 11 best stocks to buy for 2021. First of all, don't forget to like, share, and subscribe. Call it a comeback. Many of the best stocks to buy for 2021 are heavily tied to economic recovery prospects as the world fights back against COVID-19. The stock market always has a few surprises in store, as an investor in 2020 would attest. But by and large, the biggest factor that experts considered as they identified the best stocks to buy for 2021 was the same factor that dominated 2020. COVID-19. 2020's top stocks typically were tied to companies that benefited from new and accelerated trends resulting from COVID-related lockdowns. However, many of the best stocks for 2021 were largely expected to benefit from a return to normalcy and a healing economy. Continued progress in the response to COVID-19, including further stimulus, will be the key to sustaining the recovery, writes LPL Financial, a retail investment advisory firm, in its 2021 outlook. An earnings rebound in 2020 and strong earnings growth in 2021 may allow stocks to grow into somewhat elevated valuations. Cost efficiencies achieved during the pandemic may persist. That has very much proven the case. In fact, COVID-19 has finally fallen from its standing as the top threat to the market, to inflation, as the American economy has heated up considerably, generating price increases in almost every facet of everyday life. Here, then, are the 21 best stocks to buy for 2021, and how they're doing so far. As a whole, this portfolio has beaten the S&P 500 by nearly 2 percentage points, 14.2% to 12.4%, with most of 2021's first half in the books. A few of these stocks have been bulldozers for a long time and simply look primed to continue their success for yet another year. Many more of these stocks are clear recovery plays that took it on the chin for much of 2020, but are largely expected to turn things around in 2021. 1. PayPal Holdings. In September, Will Danoff celebrated 30 years managing Fidelity Contra Fund, FCNTX. His recent performance has not been spotless. The fund, with $125 billion in assets, has failed to beat its large company benchmark in 2 of the past 5 years. But James Glassman, contributing columnist for Kiplinger's Personal Finance and a visiting fellow at the American Enterprise Institute, is not counting Danoff out. His long-term record is what counts, and it is brilliant. For example, Danoff bought PayPal Holdings, PYPL, $210.80 as of December 9 publication, $268.82 currently, the digital payment company, in 2015, the year it was spun off from eBay, EBAY. Since then, the stock price has more than quintupled, but Danoff hasn't cashed out yet. He bought more in 2020. Consider PayPal among the best stocks to buy for 2021 and beyond. 2. Castle Biosciences. Glassman also has been looking closely at the portfolio of Wasatch Ultra Growth, WAMCX, a fund bucking the trend by returning an incredible annual average of 26.6% over the past 5 years. Wasatch is making a big bet on healthcare, at more than a third of the fund's assets right now. One of those bets is Castle Biosciences, CSTL, $58.05 as of December 9 publication, $72.13 currently, a company headquartered outside Houston that has developed proprietary tests for skin and eye cancers. Castle shares began trading only a year and a half ago and have since shot up 262% from their initial public offering, IPO price of $16. But Wasatch continues to add to its holdings, and CSTL now ranks among the fund's top 10 stocks to buy at 2.4% of AUM. 3. Iec Electronics. Small company stocks have been out of favor for at least 6 years, but there are still gems to mine. Dan Abramowitz, whose Rockville, Maryland-based firm Hilton Financial Management specializes in such stocks, found a major winner in 2020 in Chemours, CC, a maker of refrigerants and other chemicals that has delivered a total return, price plus dividends, of 56.9% through early December. For 2021, he likes Iec Electronics, IEC, $11.61 as of December 9 publication, $10.51 currently, with a market capitalization, shares outstanding times price, of just $122 million. IEC specializes in devices for the medical and defense sectors, and business has been booming. Abramowitz says he expects some moderation in growth rates, but earnings should rise by double digits and the price is right. Based on Abramowitz's earnings forecast for the year ahead, shares trade at a price-to-earnings ratio of 15, and profits could surprise to the upside. IEC also belongs among the best stocks to buy for 2021 because of its potential as a takeover target. 4. Hilton Worldwide Holdings. Hilton Worldwide Holdings, HLT, $106.70 as of December 9th publication, $126.93 currently, is a bet on a post-COVID recovery. Demand will pick up as the pandemic fades, says Matt Gershony, co-manager of Parnassus Midcap, Parms, who recently bought shares in the hotelier. There's no denying the virus's damage to Hilton, on track to report a 50% decline in sales and a 64% drop in earnings for 2020. Revenue per available room was $47 in late 2020, down from $102 in 2019. But Wall Street analysts expect earnings to gain ground in 2021. And a cash pot of $3.5 billion will see Hilton through. 5. Alibaba Group. Glassman is interested in the big, new stake that Matthews China, MCHFX, took in global e-commerce giant Alibaba Group, BABA, $263.80 as of December 9th publication, $209.32 currently. At 11.1% of assets under management, AUM, Alibaba is now the fund's second largest holding, behind Chinese tech conglomerate Tencent Holdings, CHE, 11.3%. Alibaba is booming, revenues have more than tripled in 3 years. The stock is booming, too, but its continued upside potential makes it one of the best stocks to buy for 2021. Glassman also notes that he still likes his 2020 pick, Trip.com, TCOM. The online travel agency's outlook quickly sank early in the year as the COVID-19 pandemic emerged, and while it recovered to small gains, it trailed the broader Chinese markets by a wide margin. Its fortunes look much better, however, heading into 2021. 6. Pinterest. Pinterest, pins, $68.47 as of December 9th publication, $69.66 currently, is a social networking app that allows users to share images grouped by keywords. Generally speaking, the user experience is about finding and providing inspiration. Pinterest makes money from advertising. Its new ad technology platform, in partnership with Shopify, SHOP, allows advertisers to upload catalogs to Pinterest. Users can buy items with just a few clicks, a development barren opportunity, Biox, fund manager Michael Lippert says will transform Pinterest's business. He thinks the shares could gain 25%, on average, over each of the next 4 years. Pinterest still operates in the red, but it could be one of the best stocks to buy for 2021, when Wall Street analysts expect it will start generating profits. 7. Twilio. Twilio, TWLO, $312.54 as of December 9th publication, $334.40 currently, enables businesses to integrate text, chat, email, voice and video into products that boost customer engagement, automatic text notifications for appointments, say, or communication between Instacart shoppers and hungry families. Twilio benefits from the accelerated digitization of business brought on by the pandemic, and it is diversifying its customer base. Though profits are still scarce as Twilio invests in growth, the communications firm is well positioned to meet sales growth targets of 30% plus in each of the next 4 years, says Canaccord Genuity, which rates the stock a buy. 8. Upland Software. Once again, Terry Tillman, an analyst with Trust Securities, formerly SunTrust Robinson Humphrey, came through big time. Glassman's annual selections from Tillman's buy recommendations have beaten the Sant 500 now for 9 years in a row. His 2020 choice, Okta, OKTA, has more than doubled through early December. For 2021, Glassman likes his choice of Upland Software, UPLD, $42.83 as of December 9th publication, $42.26 currently, based in Austin, Texas, which offers digital tools for companies to manage their customer base. This small cap might be one of the best stocks to buy for 2021, but it's risky. Namely, profits are still elusive. However, Upland has more than 10,000 customers, and revenues rose in the most recent quarter by 35% over the same period last year. 9. Wayfair. Internet home goods retailer Wayfair, $240.60 as of December 9th publication, $306.68 currently, beat expectations for results in the most recent quarter by almost any measure. Deutsche Bank, which rates the shares a buy, sees near and mid-term revenue growth being driven by a larger customer base. Wayfair has 10 million more active customers than it had a year ago. Repeat order volume as a percentage of total orders is now 72%, up to 6 percentage points from the third quarter of 2019. Longer term, accelerating store closures in a fragmented industry will drive more sales online. Deutsche Bank sees the shares at $325 to $350 over the coming year. That equates to a 12-month return of 35% to 40%, which certainly would put Wayfair among 2021's best companies to invest in. 10. Microsoft. Among the hundreds of stocks analyzed by the Value Line Investment Survey, very few are awarded a top ranking in each of three categories: timeliness, safety, and financial strength. One is Microsoft, MSFT, $211.80 as of December 9th publication, $257.38 currently, the world's largest software maker. Microsoft's earnings were in a rut between 2011 and 2017, but since then, they have nearly doubled. A big reason is cloud computing, which has become the firm's largest source of revenues. Value Line forecasts Microsoft's earnings to increase by an average of 15% for the next 5 years, nearly double the rate of the past 5. The stock also throws off a modest amount of income via its 1.0% yielding dividend. If you're looking to pad your portfolio with blue chips, MSFT could be one of 2021's best stocks to buy. 11. Stryker. Stryker's, SYK, $235.93 as of December 9th publication, $256.40 currently. Medical devices range from implants used in joint replacements and spinal surgeries to surgical equipment and navigation systems. Analysts at Canaccord Genuity say Stryker should be a core position for growth-oriented investors. New patient demand remains in question as long as COVID-19 infection rates remain high, but hospitals are adapting their infection prevention protocols, and the rate of elective procedures has started to accelerate. Strong markets include the US, Australia, Germany, Canada, and especially China. Argus research analysts rate the stock a buy and see the stock hitting $265 per share over the next 12 months. Good luck. And see you in the next video.